A very good afternoon to you, Isaac. Well, this week we have been talking about those inflation numbers seen coming in at 6.75%. Your thoughts on the kind of numbers we could see coming out?
I think, I expect a significant reduction in inflation for this month, and basically on the basis of two factors. One is lower fuel prices, as was announced about a week or so ago. That is likely to have a significant impact on the fuel side and also transport costs. And number two, also lower food prices on the back of a good harvest and a rebound in food production. So I think on the basis of those two factors, we are likely to see inflation dropping below the 7% range.
What kind of impact could this issue of the KPLC increasing electricity tariffs by 16%, as well as that VAT amendments?
That was in the media early this week, but interestingly, KPLC came out the other day and said that it was not really communication from them, and they were not really planning to do that. But I think if it actually comes to pass, then it might probably reverse all the gains we've seen as far as inflation is concerned, because as you know, immediately you touch the cost of electricity, you'll basically be touching many other factors that drive inflation, especially when you look at on the manufacturing side. That should drive up the cost of production, in addition to eating profit margins of manufacturing companies. Transport costs are also likely to go up in tandem, and generally we may probably see inflation edging up to perhaps even close to double-digit levels, if not above. So that, I think, in itself might not be a very good step at this point. And even if there's a likelihood of raising tariffs, perhaps it might be better to do so down the road when the economy has shown signs of a strong recovery.
Likely to have an impact on interest rates going forward. We know that interest rates have been decreasing in Kenya, with expectation next week's session to see the central bank dropping interest rates on that front. But when you look at falling lending rates and looking at the profitability of banks, what kind of impact will that have on banks going forward?
I think the issue of falling short-term rates is definitely a good thing. Yesterday we actually saw the 182-day paper and the 364-day paper coming down significantly. 182 actually came down below the 10% range for the first time in quite a number of months. Last week we also saw the 91-day paper coming down to 8.5. So I think that's generally a good trend. And the indications are that there's quite a bit of liquidity in the market, although CBK has been mopping up liquidity just to cushion the shilling. But I think by and large it basically means that moving forward, now that we've seen inflation has been subdued, because the CBK was initially working with the target of about 9% early this year, and we are definitely going to go below 7% this month. So I think it basically opens room for CBK to substantially drop the CBR rate. And by extension, I think commercial banks are likely to take a cue and also reduce their lending rates, because by and large, the high interest rate environment has not only been hurting borrowers, but lenders as well. Because as we've seen with the results that have been coming out for half year for most commercial banks, there's been a substantial increase in interest on customer deposits, which I think does not augur well, because it's also been squeezing their profits as well, in as much as high lending rates have also been squeezing profit margins of companies in the non-financial services sector. So I think it will be a welcome move, and of course, the other implication is that banks would also spare themselves risk management issues of high non-performing loans, which might be a reality if interest rates continue in double-digit rates for the rest of the year.
Talking about rates, seeing T-bill rates under 10%, at the 10%, below the 10% range, and looking at interbank rates right now at around 8.1%. Well, that's well below the double digits we saw at the beginning of the month.
I think what probably that implies is that we are likely to see continued pickup in terms of share prices. Because by and large, when interest rates were in the double-digit range for most of last year, for that matter, most investors were actually out of equities for obvious reasons, because of low risk associated with government securities, and they were basically playing the fixed income markets, bonds and bills and the like. But now that we've seen interest rates trending downwards, and inflation expected to continue dropping lower, I think investors now might start shifting their portfolios away from fixed income securities back to the equities market. And I think if you look at the market right now, I think by any standards globally, it's still fairly undervalued at 10 times earnings or so. When you look at, again, the earnings prospects of the companies, both on a trailing perspective and also on a forward perspective, equities, I think, present a very, very good opportunity for investors to make double-digit gains in the next 1 year or so. So we actually expect, if the current environment prevails and improves, we expect a sharp rebound in share prices for the rest of the year.
There are a number of companies offering some value on the stock exchange. When you look at the NIC Bank rights issue and the kind of performance that we have seen coming through, are you pretty positive on this company?
Definitely. I think NIC is a very, very strong bank. We've seen them posting very, very robust results, including their half-year performance, which was very, very impressive by all standards. And I think when you look at their overall strategy, especially the one for spreading across the region, which would probably reduce their their risk in terms of too much concentration on Kenya. And when you look at, again, the markets that they're targeting, very, very niche compared to other competitors, NIC, I think they're really a bank that is going to grow. And when we look at also the performance of their rights so far up to today, the investors have taken it quite well. There's been a lot of trading in their rights, which I think is an indication about the subscription levels, which overall, I think we expect at least it's likely to be fully subscribed, if not oversubscribed. So NIC's prospects are looking very, very good at the moment.
Well, that's where we have to leave it. Thank you so much for joining us. That was Isaac Njuguna. He's from Zimele Asset Management.